Hi there, my name is Lee, and the reason why I'm making this video is because I have been investing for the last several years and have found myself to be profitable. And so the reason why I'm making this video is just to share a bit about my journey with investing, what I'm planning to do in the market. Ultimately, my goal is to grow a portfolio from 100,000 to $500,000. There are statistics that says that going from your first 100K to your second 100K takes about 5.1 years. But I feel like the way that I manage my portfolio, I'm able to get to $200,000 quicker. And so the purpose of this video series is to see what I'm doing in my portfolio to get to 200K faster than if I just left it and forgot about it. So yeah, so first of all, I'll talk a bit about my investment style. Um, I've actually spent the last couple of years doing and back testing passive income investing, where I focus a lot of my portfolio on buying stocks that have monthly dividends and growing my portfolio using that method. But recently, I've been kind of learning different forms of investment, financial investments, and I've kind of branched out. So now my investment strategy is actually now no longer 100% dividend investing. It's now 60% dividends, 30% growth with 10% derivatives. So when I say derivatives, I'm talking about options trading. That's also something that I've kind of been learning about and becoming proficient in. And I feel like sometimes it does accelerate the path much faster with that component in my portfolio. So without further ado, let's get started. So firstly, I use Wealthsimple because I am Canadian, and after trying many different platforms such as um, my bank as well as Questrade, I just find that personally, I like Wealthsimple the most. It's easy to use. Also, the big thing about it is that buying and selling stocks is completely free. That's a big deal for me because when I used to buy through the bank, it cost me 9.95 every time I buy and 9.95 every time I sell. And that actually prevents me from doing a lot of things I'm doing right now. For example, dollar cost averaging, because the bank would charge you every time I'm trying to lower my average cost for my stocks. So I didn't find that very ideal. So here I am. So let's get started. This is the overall portfolio that I have. As you can see, I'm up 7.49%, $10,000. And just to preface, I've been using Wealthsimple since about March. So I think when they give this number, I think it's based on the day I opened up this account. In terms of what I have, in terms of accounts in this portfolio, I have a cash account, um, which I kind of use where I put my cash aside. Um, in case if the stock market does go down or there is some kind of correction, I have cash that I can start investing um, into new stocks that I want to buy. I have my TFSA, which in Canada here is just a account where your investments are not taxed. So when you take it out, there is no tax on top of that. And lastly, I have my non-registered account. Currently, it's really in the red. The reason being I used this account in the past mostly just for experimenting, trying things out with derivatives. But also, I also do teach as well. That's my one of my jobs that I have. And I've been teaching options trading and finance to my students. So this non-register account was really just used to show students in high school about options trading. So there was a bunch of ridiculous losses that we did inside the classroom. That's why this account is red. I don't really mind too much. It's always been a small piece of my portfolio, and if there's any losses, I can always use that for tax purposes. It has tax benefits. So let's go first into my TFSA. I think that's the best place to start. So my TFSA is up the most. Um, Overall, it's up 13.87% since end of March. That's when I started the account. I currently have $27,000 on the side that's available to trade because as we go into October, I'm expecting that there might be opportunities to buy the dip. So I'm kind of looking forward to that. In terms of what's in my portfolio, I have Air Canada. I felt like this was bought very, very early on, back before the summer when I was really getting involved in my recent transactions. That's helped me become more profitable. So I think I got in a bit early. My average price is $16.75, and I have about $9,400 invested in this, and it's currently down about $300. But it has the price of Air Canada recently has been flirting with my break even price. Um, but I think if it does hit above 17, I might just sell it, and then especially if there's a better buying opportunity when that happens. So I'm just always on the lookout to see with if Air Canada does eventually pass $17. The next thing that I bought was ENCL. So ENCL is a global X product which pays monthly dividends. It has really good dividends. I believe it's something like 29 cents per share. But most importantly, this stock that I bought is basically focused on the oil and gas industry here in Canada. Um, Last couple of weeks, I've been trying to diversify my portfolio, and I bought a huge chunk of oil and gas. That's one of the sectors that I want to put some of my money in. I put about $35,000. Lo and behold, I got pretty lucky, and last week, the war, a potential war fallout in the Middle East has caused this stock to go up quite substantially. So I bought this last week around Wednesday for about $19.08 average, and it's just been going up like crazy. And I've been selling pieces and pieces of it, chunks and chunks of it. So I'm now down to about $12,000. Um, but the price just keeps going up. So I'm looking, if the price keeps going up, maybe above $21, I might look to get rid of this whole position and put into something else. But this has been a pretty good buy. Otherwise, if this ENCL was kind of around the same price that I bought at, and that the war didn't really happen, I probably would have just kept it because the monthly dividends are pretty sweet. Okay, the next one I have is HPYT. This one is ETF that's directed at US Treasury bonds, and recently it hasn't been doing too well. So I bought it last week, roughly where it was at in the $11 and 20 cents range, and it's been dropping since then. But for my style, I usually don't have a lot of fear when things like that happens. When price goes down and I'm kind of down on investment, so currently I'm down 2.91% um, on my $27,000 invested in HPYT. Um, I just continue to buy the dip. So today I bought some. See if I can see it in my transactions, HPYT. I bought some more today, about $5,000 worth at 10.88, just to dollar cost average down. So if it goes down some more, probably down to the 10.60s, 10.50s, I might pick up more. Next one I have is USCL, which is another monthly dividend ETF, which does cover calls. And this one that I have is directed at the US market, the S&P 500. I have about $22,000. I actually had more than that. I had about $30,000, but I felt it was a little too heavy. So when I had a bit of a profit on USCL, I kind of sold up about roughly about $10,000. So now I'm down to just about $22,000 worth of USCL, and I'm up about 0.61%. Next I have is UTES. This is another ETF, but this one is focused on a different sector, which is Canadian utilities. So I bought last week as well at 10.03, $10.03, and it's also been down about 1.25%. This is another one that I'm keeping a lookout for. It's a relatively new product, so if I go into the 5-year range, it really doesn't have any statistics going that far back. The first day that it has is literally September 2nd, so it's a relatively new one. So I'm not going to be too surprised or concerned if it does go down. If it does go down by a dollar or so, I'm gonna also dollar cost average in this, because I think even if it's down, it's going to provide great monthly dividends. And lastly, I have YTSL. So this is a product that focuses on Tesla specifically, so a specific company. So I love Tesla. I've actually been quite bullish of Tesla throughout my life. Funny story is the first time I started investing about 10 years ago in 2014, the first thing that I bought was Tesla. And that time I was new and I didn't really know the value of patience yet. So as soon as I made a small bit of profit on Tesla at the time, I sold it. But and that was probably around 2017, 2018. But after that, as you know, Tesla went up like crazy, and I've always regretted it. So even now, I always feel like I have this fate with Tesla. I kind of can has this I have a good sixth sense about where Tesla is going in terms of price, and it's always done me pretty well. So YTSL is something that I got into recently. I had it back in May and June at an average cost of $15, $16. But I sold it around when it got to about $17. And after it's gone on its multiple crazy runs this summer and also recently because of the taxi cabs, I'm back in now that I'm seeing there's a bit of a drop or a pullback on Tesla. So I got in, I'm back in Tesla, but through YTSL at $19.58. It's been up since I bought it, but today's the first day it's been down because the market dropped today. It was a red day, and now I'm just down about $77. But this is a very small position that I'm creating because I believe that Tesla is probably going to drop some more in a coming month or so. And whenever it drops, I'm just going to buy the dip. And every time it drops more, I'm just going to put a bigger position in it. So I did one position around $2,000, and then when it dropped some more around $19, I did a second position, same size, $2,000 roughly, and that's why I have about 39.15 invested in this. But the next couple of drops, if it drops to about $18 or $17, I'm gonna go a little heavier into it. Maybe probably a $4,000 investment or a $4,000 purchase every time the price goes down by about roughly a dollar. So yeah, that's it for my TFSA. I mostly use my TFSA to buy Canadian products, although some of them, as you can see, they're directed at the US market or US companies. Lastly, we have the non-registered. This is the account where I do a lot of experimenting and teaching for kids. So it is down quite a bit, but I don't really care about that. It has its tax benefits if it stays red. But what I'm doing right now is trying to be a little more serious about this account. So I'll show you what I have in here. So I have a mix of Canadian dollars and US dollars, but my plan is to eventually make this all US dollars, and buying stocks that are American products. So the first thing that I have is Coney. Those of you who don't know Coney, it's a yield max product, another ETF, which follows closely to the company Coinbase. And the price kind of fluctuates depending on how well Coinbase is doing and how well crypto is doing. So I bought into this probably 2 weeks ago with an average of $13.33, and I have about $3,500 invested in this. It is down. So right now it's down about 4.2%, and I'm losing a bit. But those of you who know anything about Coney, it has a huge, massive dividend. And this dividend will be coming in the next couple of weeks. So hopefully after I get the dividend in, um, and depending on my future research in the next week about where crypto and Coinbase is going, I might decide to either, shorten the position. Um, After I get the dividend, or wait till there's going to be a growth in the stock price and then I sell it. I don't know what I want to do with it yet. But the reason I kind of want to get out of this now, 2 weeks after I bought it, is because I did get hit with a tax because I am Canadian. They make um, non-American investors of these dividend producing products to pay an additional tax, a foreigner tax, for holding and also earning dividends on American stock. So I don't know how I feel about that. It was a very small thing. It was only like an 18% loss, but I just feel like there's just no need to take these kind of losses if I can just also invest in growth stocks in the US market that I really, really like. So if once I introduce my next couple of products in my non-registered account, you'll see why I'm thinking of getting rid of Coney. So the next thing I have is Palantir. This is the big reason why I want to start a US account. I'm quite bullish about Palantir, and I feel like in the next 3 to 5 years, maybe when we arrive at 2030, that Palantir is going to be over $100 in terms of valuation. So right now, I'm just trying to find buying opportunities to buy into Palantir. That's why if Tony doesn't turn out too good, it's very volatile, and I'm being hit by that tax from the US. I might just reduce my holdings in Coney and move it to Palantir. So I bought starting last week. This is a fresh new position, by the way. I bought Palantir many times in the past, always made a profit when it was in the 20s. Once at 21, then at 26. And then I sold when it got to 30, but now I'm kind of back in because I want to hold a longer position on it. Last week I bought in at around an average price of $38.72. But this is just my first ad. I think that every time Palantir does correct in terms of its price and do a drawback, I'm going to start um, taking additional positions into it. And as I take more positions, each position will be a greater investment than the previous one. So I'm looking to maybe consistently invest into Palantir in the next couple of months and hopefully get this average price down to maybe $35 or even $30. The third thing I have is Nike. This is a very new position that I'm starting. Nike was something I wanted to buy back in the summer when Nike had its huge drop in the summertime. So if I can see its 1 year charts, that's where that drop happened around June 24th, June 26th. Nike dropped from about $97 to about 73, $72. I wanted to buy then, but I had a lot of my stocks and my money. I had a lot of my money tied up in other stocks. Also, I was doing a lot of options at the time, so I kept a lot of my money liquid just to do options trading. Um, but Um, Now I'm kind of back in because I saw that it is currently pulling back from its high of about $88, $89 back in September 28th. And if it does go down, my first ad was not really substantial, only about just shy of $500 ad into Nike. If it does fall, I'm gonna continue building a position into that, especially if it goes into the back in the 70s. Last thing that I have is Ethy. Okay. So, like I said, I do have a proportion of Canadian dollars in here. The Canadian dollars investments I've been doing has been doing pretty well. I think I only put $2,000 at the beginning, and it's now kind of ballooned to much higher than that. And so last week I did buy Ethy when it did drop to about 2.9, $3 range. In the end, I had about average cost of $3. Um, that was probably last Friday. Yeah. So this is really short term, just in the last 3 days. Today, Ethy automatically went up because it was such a good price to be buying at last Friday, around $2.90. It did go up to about a high of $3.13, as you can see here. And I was trying to put in a sell order at that price because I was automatically making like a good $80 to $100 just from holding it for less than one business day. But it didn't happen, didn't fill. So I'm just gonna look for the next opportunity to get out of Ethy when it goes back up again. Right now it's at 304, which is actually not a very high price for Ethy. So I'm optimistic that it can go on another run in the next couple of days or weeks. Ethereum can do that, and then when it does go up, I might cut this position at the end and take the gains for that. So yeah, that's it. As you can see, just to summarize, my style is first and foremost, dividends, investing in stocks in my portfolio that pay a monthly dividend, because ultimately, none of us have a crystal ball. We know where the stock is going, but dividends are constant and it's a safe. Um, so I try to make sure that a majority of my portfolio is in dividend producing stocks every month. But also, I am about growth because I do spend a lot of time looking at charts, doing research, watching the news, speaking to people who are very, very knowledgeable about this stuff, who are in the industry, to find the best growth stocks and buying opportunities for growth. So I made about 30% of my portfolio, as you can see, centered around just growth. And lastly, um, I am also looking to make some derivative plays soon as well in the form of options. So whenever there's a interesting options opportunity, I'll be getting to that as well, and I will be just sharing some of the ones that I'm trying to buy and get into. The most recent one was Alibaba. Um, so as most of you may have seen in the news, 2 weeks ago, China did release its economic stimulus to boost Chinese stocks on the US market, and Alibaba saw a huge rise. So I was timing that pretty accurately. After it went on its first run, I started buying puts, betting that the price will go down, and it did. Made a good 50% gain on that in just one day. And then as it was going for a second push up to about $115, I was buying calls on that. So yeah, stay tuned for my videos. I think whenever there are some options plays to be made, I will be sharing it through this video series, and you guys to see how some of these trades play out. All right, so that's it for this video. Thank you so much for listening and watching. Good night.